Good afternoon, everybody, and welcome to this edition of our weekly Broker Moves review for April 16. My name is Carl Capaliva. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to be with you as we invest all of the big broker moves from the last week for the Australian market. First, we'll talk about ThinkMarkets Difference, which is substantial, $8 flat rate trades, your own holder identification number, unlimited phone support, and of course, no hidden platform or subscription fees. And if you're a new client to ThinkMarkets and sign up with us before the end of June, you'll also get 5 free trades to get you started. There are some terms and conditions, as there usually are in these sorts of scenarios, so head to the website for further details. The agenda for today, though, is to check out all of the big ratings, upgrades and downgrades from the brokers and their price target increases and decreases, and then we'll finish off by looking at a few stocks of interest. The key to unlocking this table is to consider that each broker has a rating system, somewhere between sort of sell, hold and buy. There's a few in between, for example, accumulate, underperform, outperform, but generally what they think their clients should do with the stocks they cover. They'll also have a price target system based upon their fundamental valuation, where they think the share price could get to over the next sort of 12 to 18 months. Let's have a look at Bank of Queensland. For example, JP Morgan has gone from a hold rating to a buy rating, which is about as strong as you can get in terms of conviction, and they have increased their price target from $9 to $9.30. That is an increase of 3.3 share price, and that price target, the broker believes that there's about 4.7% upside left in the stock. Bank of Queensland, of course, came out during the week and released their half-yearly results. They reported a 9% increase in their cash earnings to $166 million. That was roughly in line with the expectations, as was the dividend they declared of 17 cents per share, but it was generally well received by brokers. And it is at one of our feature stocks today, so we'll pause here and talk about that a little bit later on. BlueScope Steel also got an upgrade from JP Morgan from accumulate to buy this time. They increased their price target by 13% to $26, and that allows quite a bit of upside left in the current share price, about 24.8%. JP Morgan upgraded its price forecasts for a number of key commodities that BlueScope deals in, and also noted that strong demand was being seen in the steel market, and spreads were also very solid as well. Galaxy Resources, Macquarie went from underperform to outperform. Now that's actually 2 steps, because there's usually a hold or a neutral, depending on what the broker does, in the middle, and they don't often do that, so that's pretty impressive. The other thing that's impressive is the increase in the price target by some 181.3%, leaving about 28% upside. I would suggest to you that Macquarie was a little bit behind the curve on some of their lithium stocks. That is what Galaxy Resources does, because when we get down here to Orocobre, which is another lithium stock, you can see there's also a rather large increase in the price target. But, you know, whilst there's still some pretty good price appreciation left in it, around 14%, it's nowhere near as big as that price target increase. And yes, they did say that they have increased their expectations for lithium and spodumene, which is one of the raw sort of lithium materials. And in the case of Galaxy more specifically, there was also some corporate news there where they updated their Sal de Vida operation and provided some timing and production guidance on that one. Again, quite well received by the brokers in general, and that is also one of our feature stocks for a little bit later on. Looking down the list, we've talked about Orocobre. That was the other big one there, but also a pretty good one for Tabcorp from Credit Suisse. The broker upgrading their lottery earnings estimates for the company by about 5%, also noting that earnings momentum appears to be building, and they're seeing some potential value out of the possible demerger that the company's been talking about. 23% increase in the price target, still about 16% left in that one to boot from Credit Suisse. Wesfarmers getting a modest one there, 6%, but JP Morgan thinking that the stock is overvalued. And Zipco, one of the very widely watched stocks on the Australian market. Citigroup going from neutral to buy, that's impressive. Not so impressive, though, the price target decreased by 0.4%, but the broker still seeing about 22% upside in the stock from here. Into the ratings downgrades now. We've got National Storage REIT going from accumulate to hold, flat on the price target there. Platinum Asset Management from neutral to underperform, small price target increase, but not a lot left in it according to Credit Suisse. JP Morgan on Regis Resources, they were in the news this week. Also, they announced that they would acquire the 30% stake in the Tropicana gold mine, which is currently owned by IGO, for $903 million, and they would fund that with a mix of cash and scrip. Brokers not so happy with that decision, most of them saying that they paid too much, that is Regis Resources paid too much, and we saw really unanimous price target decreases for the stock. This one is by 19%, and as we said, accompanied by that downgrade from buy to hold. And quite confusing, I think, for brokers, that decision to buy that asset, but still about 24.5% upside seen from JP Morgan. It is a feature stock. We'll talk about that a little later on. Coincidentally, so is Whitehaven Coal. They were out with their quarterly production report. Disappointing at Narrabri once again, company missing their numbers, and once again some price target decreases. Credit Suisse this time by some 20%. To back up their downgrade from outperform to neutral, and not a lot left in it. Looking at the price target increases, so steady ratings here, just an increase in the price. We have talked about many of these, to be fair, up to this point, including Bank of Queensland and BlueScope Steel, as we have also for Galaxy Resources. But you can see what some of the other brokers are thinking there, including their ratings. So the standout, no doubt, is Galaxy there with 4 out of 4 price target increases, and all but Morgan Stanley still seeing some upside in the price. Morgan Stanley, the sole wowser there with an underweight rating. Into the second page, IGO clearly getting the better deal there with that Regis Resources transaction announcement, but not a lot of value seen in it from this share price by Morgan Stanley. Plenty of value seen in Mineral Resources. That's they've got some lithium as well, don't they? And not to mention some iron ore, so all the good stuff there at Mineral Resources. And Macquarie increasing some of their price expectations for some of those basic commodities, hence the increase in the price target by 22%, and plenty of upside seen in it with an outperform rating. Probably one of the standouts there, I think, in this list of increases. But News Corp doing pretty well there. They got a 16.4% bump in their share price target, with still close to 40% seen and an outperform rating. At Macquarie Group, we've talked about Cobra already. Qantas getting some tiny notches up, but still well viewed by the brokers with quite a bit of upside and some very strong ratings there, as is Seven Group Holdings with some modest price target increases, but still plenty in it, and some very strong ratings there also. Into this second page of our increases, Tabcorp we have already talked about with the 23.9% increase, and the other standout there is WiseTech. Just an underlying improvement in the fundamentals seen from Morgan Stanley, hence the 30% price target increase, but only about 6% left in it. They did retain their overweight rating. And UBS, whilst we had Citigroup upgrading on Zipco, UBS still the sell rating, but they did manage to find a small price target increase in that. 30% downside to their price target for Zipco. Having a look at the price target decreases, not so lucky. A couple there for Rio Tinto, not very big to be fair, still some upside seen in it. At Macquarie, one of the sort of bullish brokers on the commodities sector, and one of the less bullish to be fair, also Macquarie Bank, thinking that's 10% overvalued. Fortescue, a small tweak there, but still plenty of upside seen at JP Morgan, and they retained their buy. Looking down the list, we have talked about Regis Resources. We'll talk about it a little bit more when we get to our feature stocks, as we will Whitehaven Coal, and we've already talked about that Zipco small price target decrease as well at Citigroup. Bank of Queensland, as mentioned earlier, their half-year results were out largely in line with expectations, but underlying that, some very highly regarded metrics there from a few of these brokers, including a strong performance with respect to revenue growth and reduced credit risk. As viewed by Citigroup, they said that some of those tailwinds should continue into, I would say that's a typo there because it's H2, because we've just had H1. Provisions remain overstated, that is for loan losses, and other positives include reduced costs to assist forecasts going forward, but stocks looking a little bit fully valued. Didn't stop them from increasing their price target by 50 cents to 9.50 and retaining their buy rating. Credit Suisse increased their price target from 9.50 to 10, retained an outperform rating. Whilst the results were in line with expectations, they were pleased with improvements in revenue growth and their net interest margin, which increased by 3 basis points to 1.95%, by the way. They said the outlook remains solid. They increased their expected earnings modestly, 1% for FY21 and 2% for FY22 as a result of the results. JP Morgan upgraded Bank of Queensland from hold to buy, raised their price target from 9 to 9.30, so one of the more modest price targets there from the brokers, but did say it is their preferred sector pick. Still some tailwinds around, hoping for some better execution to drive future earnings, lower costs in the system as well, and some positive growth. Looking at what the rest of the brokers think about the stock, we do have 5 buys at the moment, 5 holds and 1 sell. It gives us an overall sort of average rating of a hold. The mean price target is about $9, but I would suggest that's going to go up, and quite reasonably so, as a result of some of those price target increases. So, sort of give or take here. But having said that, not a lot of upside left in it based upon that, but a high target of 9.50 provides a little bit more. Looking at some of the fundamentals, the numbers aren't looking fantastic. Not great here, but hey, it's a bank, isn't it? So it's not a great number if you're a stock standard sort of industrial company like Breville, for example. But for a bank, it's pretty reasonable. The PE, I wouldn't say, is screaming cheapness here, but there is some growth in the system that's come back into the banking sector, hence that is going to fall over the next 12 to 18 months. The dividend yield, this is a forecast yield, by the way, because they do need to get back to quote-unquote normal post-COVID, is over 4%, and that is expected to grow to 5%, which is definitely a tick, and we don't have any data here for whatever reason. So hard to give that an overall rating. Just a bit more of a question mark than anything else. That's probably a question mark. The chart looks pretty good though. Having said all of that, we do have a really well-established short-term uptrend, a really well-established long-term uptrend. We are in a bit of a consolidation phase, as are many of the banks at the moment. But if we can break to the upside, then I think there's a bit more to go here. I think you've got very logical sort of upside-downside areas of support and resistance. If it got below 840, you might want to think twice about holding it, but until then, happy to stick with it. We actually have covered it in Think Technical on the 29th of December at $8, a little bit ahead, and as I said, happy to hold it on the basis of the technicals. Having a look at Galaxy Resources, we might as well start with the technicals here. We have covered it in Think Technical, it seems, about 3 times. So starting off at $1.22, which is in August, so it's over here. And then there's one in October where I've roughly drawn that second circle, and then there's one in December, sort of around here. And to be fair, all looking like fairly sensible places to buy it from a technical perspective. What about now? Would I buy it now? Certainly doesn't look terrible. I'd be more comfortable buying in closer proximity to this green line. Okay, so when we get back there, that's typically our value zone. So I'd be buying pullbacks on this, without a doubt. I don't know if I'd chase it and buy it now, especially if I was already in it. So it's an absolute hold, there's no doubt about that, but maybe looking to buy in and around that sort of 3 to 330 level if you've got a pullback with some nice candles. What would a nice candle look like? It would look like that last candle, coincidentally. So it looks fantastic overall. Hold if you've got it, buy in the 3 to 330 zone if you don't. What do the brokers think about it overall? They're a bit mixed, actually. I think a few balking at the current valuations for sells there, amongst a few buys and 1 strong sell, average of a hold. Their mean target, now these targets will go up because of the targets listed here. There are some wowzers. I mean, look at Morgan Stanley, they're only at $1.80. I would suggest that they've got their head in the sand on this one. At 228, it is certainly above that mean target, which is down here, which will go up slightly, but regardless of those revisions, it'll still be above that target. So, when you get into these stocks, it's a matter of understanding, I guess, what the market's thinking about it, and therefore how much you apply, how much capital do you apply. This wouldn't be a major portfolio cornerstone. It would be a small risk position that is going to take advantage of the potential reward that generally comes with that risk. There's not a lot to go on in the numbers, to be fair. We don't have any earnings at the moment. and not likely to have any going forward. And you might then ask, well, how is a company doing so well if it doesn't have earnings? And it's all about what's going to happen out here past FY22, and that's what brokers are looking at. And there was, maybe not on screen, but certainly in the reading that I did in preparation for this, brokers are looking out to 2030 in terms of their production estimates for this stock. And they did note that with an improvement in, I'm going to say, spodumene prices mentioned here, and there's a few times that better prices are mentioned, and that's one reason for some of these upgrades in their price targets. But also this update of their Sal de Vida operation, where the company provided next steps, so how they're going to get the basic mineral out, the rates of production they're expecting, and starting to project some cash flows from that. And that gives the brokers more information to really get a firm valuation on the company. Look, I'll let you press pause and obviously read through some of the commentary there, but suffice to say the price target increases, which we saw earlier in the presentation, were significant, and we even saw an upgrade there from underperform to outperform at Macquarie Bank. Okay, next stock is Regis Resources. Here we mentioned that they're going to buy that 30% stake in the Tropicana gold mine. It is a minority stake. It means they don't have a lot of control over the operation. Brokers generally thought they paid too much for it. I saw here from Morgan Stanley comparing the price tag of 903 million to a valuation of 550 million. And it was a pretty consistent theme. Brokers thought it was too expensive. It's going to dilute the earnings of the company. Negatives in here, earnings dilutive again, lack of detail on production estimates, not impressed with the price paid. On the positives, however, the brokers were pretty unanimous also, saying that it solidifies the production profile, it increases the diversification of their portfolio, but I don't think the pluses are outweighing the minuses there, and hence we've seen unanimous decreases in the price target from all of the brokers involved, and some of them quite substantially so. And also the downgrade there from buy to hold from JP Morgan. This will probably have to update. I don't think this is accurate. It takes a few days for these to come through. But whilst the average price target is probably still up here somewhere, yeah, I think you have to put a question mark over some of those broker estimates. I think they've just been caught off guard by not only the underperformance of the stock since the gold price turned, but just operationally as well. In terms of the fundamentals, though, we compare that enterprise value to revenue number from Bank of Queensland of 13 or so to 2 here, and that's much better. The PE, there seems to be some growth in the business coming through, which is going to drop that PE, so that's impressive. The dividend yield, if it's maintainable, looks very, very good here, and otherwise everything looks really, really solid. So if this was any other company, I'd almost give that an A in terms of just how the basic numbers look. I can't really tell you much on here. In terms of the trend, it's clearly down on the short-term basis. It's clearly down on the long-term basis, and lower peaks, lower troughs. There's so many black candles. I mean, every time this thing even looks like going up, it gets beaten down on the day. I can't see any reason to buy this at this stage, even though the fundamentals look interesting. So it doesn't mean it's not a buy at some stage. It's just not a buy right now. So make of that analysis what you will. Heading into the last one is a company which I thought was going to do well this year. Certainly coal prices have improved, both the coking coal and the thermal coal. So in some respects I got that right. I just haven't got the business right. So Whitehaven Coal, they had some geological issues with one of their operations, the Narrabri operation. There's also been some flooding. I think a bridge got knocked out. There's things that the company couldn't control, to be fair. Some of the brokers saying that those issues are going to back out, and fingers crossed production will improve. Also, the company's going to get the benefit of those higher coal prices, which I talked about. but it isn't enough to stave off some price target decreases on that worse than expected production report. Most brokers, labelled it as disappointing, but blames circumstances beyond the management's control. Floods, port damage. It wasn't a bridge that went out. But nonetheless, 195 down to 155. So big drops in the share price there from Credit Suisse, 190 to 170 at Macquarie, and 230 to 210. A little bit more modest at Morgan Stanley. Overweight rating, I guess, still optimistic there from Morgan Stanley. Downgrade from outperform to neutral at Credit Suisse. Still a buy at Citigroup. So a little bit mixed there on the broker front. This will probably, give or take, stick with an average of a buy. A mean target, this will have to come down, I think, to probably 190 to 180, which does provide a little bit of upside. In terms of the fundamentals, that's outstanding. The rest hasn't done so well because of the depressed coal prices. And it was on that expectation that we covered in Think Technical at 172.5 in December, and that was sort of around here. Look, it's basically gone sideways since then, and more recently moving towards the bottom of this range. I think if it did break below that 140 level, you'd want to take a very serious look at whether you wanted to hang in on the stock. So yeah, a little bit of a mixed bag there on those stocks of interest. You can catch all of our other updates, news, views, analysis and opinion. You can follow me or the Think Markets handles on Twitter if you'd like. And of course, this Wednesday we're going to have our top 3 ASX turnaround stocks. I'm not sure if Whitehaven or Regis Resources are going to make it into that list, but we will have 3 very interesting ones for you to check out. And then a week later, on the 28th of April, we're going to have Ask the Experts, where you get to bring your portfolio to the table and ask me for some on-the-spot analysis. And then on the 5th of May, couldn't be more timely, a fundamental analysis refresher. So when I talk about enterprise value to revenue, you'll know what it is I'm talking about. The disclaimer before I leave you today says that everything we've discussed is general in nature. We are a regulated Australian broker, and we do have some products that could see you lose more than your deposit, so please consider this disclaimer carefully. Or if you have any questions at all, please give us a call. It's been a pleasure chatting with you today. Hopefully you got lots out of it. All the best for your trading. Until we catch up again. Bye-bye for now.